Hey, hello, welcome to the channel. My name is Daniel. Today I want to show you one stock that's gonna kill it in the market in 2020. This is one stock that has the potential to make us lots of money in the stock market in 2020. So let's get right into the video. And the stock I'm talking about today, its stock price is likely to appreciate massively in the future because it's so undervalued, and it is an excellent dividend stock. The stock I'm talking about is Foot Locker, ticker symbol FL. Foot Locker is the company that sells high-end shoes. They're selling shoes like Jordans that cost hundreds of dollars for consumers. And in 2020, Foot Locker is planning to open 20 new locations, which is going to help their company grow much more in the future. Recently, Foot Locker has made a $100 million investment in an app called GOAT. GOAT is an app that allows everyday people to buy and sell shoes. They're kind of like an eBay for shoes. What GOAT does differently than most resellers is that they check whether the shoes are authentic and whether they are clean and high quality before they are resold, which allows them to build trust with consumers and it allows them to capture a lot more of their market share. Foot Locker investors are going to be able to make a lot of money off of the GOAT app, which is currently a private company, which is another great reason to invest in Foot Locker. In the shoe market, apps like GOAT are trending, and they're one of the biggest, fastest growing ways consumers are buying their shoes, and it's really popular among the youth, which is a really good reason why you should buy Foot Locker stock in 2020. If you take a look at Foot Locker stock, you're gonna see that they're trading at about $36.25, and with a PE ratio just under 8, which is extremely low. It's trading like a company that's not expected to grow at all, or even, in fact, it's trading at a forward PE of less than 7, which is extremely low. And when you take into account their growth rate, they're expected to grow their earnings by about 6% per year over the next 5 years, which gives them a price to earnings to growth ratio of about 1, which is amazing, which is very low for a company. It just shows you that Foot Locker is trading at a very attractive valuation and that its stock price is going to grow really well in the future. What's even better is that Foot Locker currently has a dividend yield of almost 5%. 5% is extremely high for a company. A 5% dividend yield is extremely good for a company that has a sound and safe dividend. If you take a look at their historical dividend payments, you see that they have consistently been growing their dividend, which is an excellent sign that they're going to continue to grow it in the future. An investor theoretically only needs a 3% gain in stock price appreciation just to match the market, which is amazing, considering that this stock is likely to tremendously outperform the market just due to its appreciation. And what's even better is that Foot Locker currently has a payout ratio of 32%. The payout ratio is essentially the percent of earnings that are paid out in the form of dividends. If a stock has a 5% payout ratio, it means that they're paying about 5% of their earnings in the form of dividends. For most companies, a payout ratio of 32% is very low, and it gives Foot Locker the opportunity to invest a lot of their money back into the company to grow it and grow their profitability and open more. And a 32% payout ratio is really low, which means that they'll be able to grow their dividend easily in the future, which is going to be amazing with the stock with a starting yield of almost 5%. Therefore, in 2020, Foot Locker is possibly one of the best investments you can make in the stock market. Let me know what you think down in the comments, and I hope this video helps. And don't forget to like and subscribe for more content in the future.